All right, so what we're going to focus on is market structure and being able to read market structure, break of structure, and then change of character. And again, understanding market structure is the foundation of any strategy. Being able to read naked charts should be like your core language, all right, of these markets. Price is everything, all right? Being able to understand what price is telling you is everything. So, we're just going to take a look at just like a 15-minute time frame. This looks like a really confusing looking chart. As you can see, a lot is going on. There's really not that much structure, but we also going to go over micro and macro um charts, and just to see which one you are more aligned with. So the micro um trend would be this that's going on here right now. The macro would be all of this, looking at the bigger picture. If you're like a day trader, like a scalper, you want to focus on like micro, macro. Um, you can still scalp looking at the macro, and you can still be a day trader looking at the macro, but just know that opportunities won't come as much. Like micro, you can probably find a setup every day, every other day, or something like that. Macro would be like you only take one or two trades a week or something like that. Okay. So when you're looking at a micro, you're looking at the immediate trend that you see, okay, which is this right here. And as you can see that the market, we have a high, we have a pullback, and then we have a higher high, and we're starting to pull back right now. So all in all, we can say that this micro trend is bullish. All right. Um, let's look into what a break of structure actually is. So all a break of structure is basically confirming what the trend is. You have to have break of structures to really confirm the trend. So if you look at this right now, if you came to the charts and you only seen this high and this pullback right here that we got, um, that doesn't confirm a uptrend. It may confirm that you need to be cautious about what's going on, but it doesn't necessarily confirm that the bias is bullish. The only thing that confirms a bias is the break of this high. Okay. So breaking above here, that confirms, hey, we are shifting in direction, and this is a uptrend. We're starting to go up. Okay. So this will be your break of structure. Okay. Now, what else confirms the bias, and also that you need to be cautious of what's going on in price? So if we look back here, we have it is a range, it is choppy, but the price is not always perfect, right? So we need to be able to read even in the most choppiest, confusing looking markets. Okay, that doesn't necessarily mean you have to trade, but at least understand what could possibly be going on. So as you come back here, you can see that the market has been a little choppy. So we have this low right here, way back here, and then this low wasn't broken again until right here. Okay, and this low was broken from this pullback right here. Okay. So this high made this low. All right. So now that we have a new low and we have a new high that made that low, And if you want to be super conservative, um, there's other ways that you can read market structure, but this is just going to give you just something just straight to point, just straight to the point. You want to look at swing points, okay? And this is your high, and this is your low. And as you can see, that we are moving in a downtrend, okay? Many people look at trend shifts in so many different ways. Again, this is trading. There's so many different ways you can look at things. There's so many ways you can confirm things and confluence and all that other stuff. But when you aren't using trend lines and you aren't using anything else, you're just using just simple naked charts, the break of this low with this candlestick break makes this sorry, the break of this high with this candlestick break confirms that there is a change of character. Okay? There is a change of character because if this was a strong downward action, we would have made this low like we did, came back up somewhere in this range, and then continued to make another low. Okay. So this basically tells me that, hey, this was the highest point the market made before it made a lower low. All right. Now price is breaking the highest point the market made before it made this recent lower low. That is a change of character. And with that, said, does that confirm does that confirm a bias? No, all it confirms is that you need to be cautious. What confirms the bias again is the continuation of upward action and the break of structure. That's what confirms your bias. Okay? So let's look at another example on another chart. All right, I'm gonna show you guys a trend, but let's just look at another market that looks that's not really trending because the market, like I said, the market's not gonna be perfect all the time. So right here, we have this lowest point. If we look back left, we have this low point right here, right? And then structure comes up and it makes another low point. All right. So these are our swing points. This is our swing low and this is our swing high. This high made this low. Okay. It closed lower than this low. It's not a strong, like super, super downward action, but price is starting to break down because we broke this previous low. And then from here, we have another low that is broken, which is a break of structure. And the highest point the market reached before it broke this low was right here. So we are confirming that there are breaks of structure. Okay. Is this a strong trend? No, but we are breaking down in structure. Price is getting lower, price is closing lower. Okay. And then again, right here, price hit a high point before it made another lower low. So here's a high point, it pulled back and it made a lower low, and that was another break of structure. So even with the very low volume, there was, and I'm not saying that you have to take these opportunities to continue to take price down, but even with low volume, you can see that price is slowly breaking down. Okay. And again, this is not necessarily saying that you have to take opportunity and take action when the market looks like this. This is just having a clearer understanding of what's going on in the market. Okay. Being able to read price, and price is so important. So you have the break of structure and you have price from the highest point before it makes its break of structure. So you have these like swing points. Okay. And then what happens? You have price close above the lowest point, the highest, excuse me. You have price close above the highest point it made before it made this lower low. What does that mean? That means that no, bulls, there's no confirmation that this is a bullish micro trend, but it may be confirmation that there is a change of character and bulls are starting to step in. So from here to this break, we had a change of character. Okay. What confirms the bias? This means to be cautious because bulls were able to close price above the highest point that made the most recent low. What confirms a bullish bias would be a nice pullback and then another high form that will break structure. It will be a break of structure. Then that confirms your micro trend is bullish. Okay. And trading, nothing's ever 100%. The markets are pretty unpredictable. But when you understand what price is saying, it gives you a little bit more clarity and confidence on what's going on. Okay. So being able to read what the market is telling you and knowing the bias needs to be the foundation of any strategy, any concept. Okay. And understanding highs, lows, ranging markets, break of structures, and change of character will be like the foundation to understand what the market is actually telling you. Okay. So let's look at one more chart and hopefully it's trending. Um, this is GU. Let's see. So we have equal highs right now. We have equal highs. Um, let's just see what's going on here. If you came to this chart. So we had some equal highs, we pulled back, and then we made a higher high. So that just basically confirms we're still breaking structure. So that confirms we're bullish. We pulled back again and we made another higher high. So that confirms that we are still bullish. All right. But as you can see, we pulled back again and we were unable to break structure again. We're just making equal highs. But my question is to you, are we still bullish? Would you say we're still bullish? I would say for me, I would say I'm still bullish, but I'm cautious. Okay? Because we're really close to the lowest point the market made before it made this high. Okay? If the bears are able to come in and break this low, that would definitely signal a change of character, as you can see. If bears were to come in that would definitely be a change of character. Okay? That's just a possibility. Does it mean it's going to happen? No, there's no confirmation. There's no confirmation just yet. Um, but I would be cautious because, I'm not necessarily a pattern trader, but most of us know, when you see double tops, that's like a heavy like signal that market may, you know, do a nice deep pullback of something of that nature. Um, it's just to be cautious, you know what I mean? But there's no really confirmation because this is a support. As you can see, it's a strong support. We bounced, made a high from this support. We bounced back, wasn't really able to break structure again, and we're here again, and we're just waiting to see what happens. There's a strong possibility that we may continue to go up or go down. You just need those. You just need confirmation. And then as you can see, if we bounce off here and go up and break these highs, that would be another break of structure. Okay. But my whole thing is this: being able to read this chart and being able to see, hey, we are in a uptrend, but we might be getting ready for a change of character to go down. Being able to read that again is such a great thing to be able to do, and it's such a thing that um that like I said again, it should be like the foundation. But the thing I notice about traders, they'll come to this chart and they would want to buy or sell immediately. They don't want any other confirmations. They don't have patience or anything. Just because you can read market structure, that doesn't mean that patience is out the window. That doesn't mean to take action. That doesn't mean that there's an opportunity. There's a setup. That has nothing to do with market structure and being able to read naked charts. What it means to be able to read naked charts and to be able to develop a bias and understand what exactly the market is telling you. Only thing that means is that you just understand what's going on. It has nothing to do with taking an actual trade, but it has everything to do with clarity and having confidence. Okay? It has everything to do with understanding what's going on. But understanding what's going on does not mean you have to take action. So we need to really like separate the two. But once you understand what's going on, you will have a peace of mind. Okay? So that's all I have today. If you do like this video, please comment and then I'll make more content like this. We can look at so many different charts. This will never get old because price never looks the same. I mean, it looks similar, but it will never get old because the market looks crazy at times, and there's so many different, markets, so this is good practice. We can do this all day, but the more you do it, the more you see it, the better you'll be at reading price and understanding price, okay? So again, this never gets old. So just let me know if you want more stuff like this. We can look at different markets. If you have a certain instrument that you like, we can break it down, time frame, we can break it down and really understand the highs, the lows, the range, the break of structure, change of character, and being able to actually read the market and see what's going on.